The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour, and glad to have you on the show today. Appreciate you for tuning in and listening. And let's go ahead and do a market wrap for you. Looking on over at the S&P, it is flat on the day. And looking at NASDAQ, it's up 9, the Russell's up 5, Dow is up 6. Looking at copper, it is down 0.011, which is about 1/3%. And looking at silver, we got it right now. It is up 0.208, which is about almost 0.75% there. Corn is down 5.75, and soybeans is up 17 points, a whopping 1%, making it the big mover of the day. And checking on over at oil, we got oil right now. It is up 8 cents on the day, pretty flat so far. We got natural gas down 0.006. We got euro dollar down 55, and we got pound dollar down 53. So dollar gaining in some strength in the midst of everything that is going on over there. But gaining a little bit over, looking over at the Aussie dollar. It's actually up 28 pips against the Aussie and down 22 pips. The dollar's down. Looks like actually, well, yeah, the dollar's down 22 pips against the yen. And on the U.S. franc, we got the dollar showing some strength, up 41 pips. And on the U.S. CAD, we got the U.S. dollar there is up 18 pips on the day. And that's a quick conclusion we like to do each and every day, just keep you updated. And just to make sure you know that you can listen to us live anytime from anywhere on TFNN.mobi, TFNN.com. And if you listen to us online at TFNN.com, you can go to Tiger TV and you can watch the charts as we're talking as you're trading. And so different things like that you can do to access a variety of live trading shows. And it's really nice. You get a lot of live market commentary on futures, forex, stocks, options, and of course Nadex. Now, if you have any questions, feel free to give me a call, 877-927-6648. Again, that's 877-927-6648. And if you haven't done so already, go ahead and click on the Nadex banner, and you'll be able to open an account. You can click on Create Account, and you'll be able to open a live account. It's only $100, and it takes less than 5 minutes from live to funded to get a live account. Now, of course, I do recommend you put in more than that, but you can make trades with as little as $100. Actually, you can make trades as little as $5 on the market. And to get a demo account, just go up to Range of Markets and click on Demo Account, and then you'll be able to fill in the information and click Apply for Demo. And that'll let you get a demo account set up, and it's easy to do. It takes about 15 seconds. And you fill in your username, first name, last name, phone number, and email address, and click Apply for Demo. And they send you an email with a password in it, and you're able to log in right away. It makes it really easy, makes it really simple. And if we hop on over, and I'm going to go ahead, and what I like to do every day here on the Diagnostic Trading Hour, and is go over ways to, of course, maximize leverage, minimize risk, and be one step ahead of the markets. And in Diagnostic Trading, we talk about fundamentals, seasonals, technicals, and statistics. And so if you haven't checked out our site already, definitely hop on TFNN, click on the Diagnostic Spread Analyzer, and I give you tutorials learning how to trade Nadex, and I also give you access to our deviation levels. Just click on that right there, and you can subscribe at any time. You get a 2-week free trial, risk-free trial, where you can try everything out that we have to offer. And you also get access to me in the help desk area where you can ask all the questions that you want. And so, it's very, very cool. A lot of different ways to do it, and a lot of different ways to trade on Nadex. And in all ways, you can, have limited defined risk. And so what I want to do is go over the fundamental trades. And we have the Spanish unemployment change report. Came in last night, came in much higher than expected, which is a bad thing for the euro. And one of the reasons we're seeing that down right now at 128,000. And versus an expectation of 90.3. And then we have the PMI at Britain that actually came in worse than expected at 50.6, again, way in there on the pound. And building permits over in Canada came in this morning down 13.2%. And they actually expected that to be at negative 2.6, so that's pretty bad on the U.S. CAD right there. Hurting the Canadian, so helping lift the dollar. And if we go over and look at the PMI this morning, had a bit of an impact on the markets. And so on PMI, let's see here, it came in at 54.2. We expected 54.6. And I think one of the it's a great indicator to use as far as just the health of the economy. And they go through what they do is they actually survey 400 purchasing managers, people really on the front lines making decisions about employment, production, new orders, prices, suppliers, deliveries, inventories, everything. And so it really definitely is showing a negative thing in the economy. And so one of the things you want to do is be aware of how to trade these reports. And let's see here. I want to look up. Yep. So, yeah, definitely came in, and that's worse than... let's see, last week we had 55.1, then we had 53.7, 52.6, and I want to go ahead and check out what else do we got going on. But of course, we've got the elections tomorrow, right? But for the day, we got the G20 meetings, and the G20 meetings is obviously where the major countries get together, their finance ministers, everything else, and they make decisions about what they think the future should be. And if we look over at the cash rate, that's coming out tonight on Aussie dollar, so that's our interest rate. And so, G20 is going to be huge with everything that's going on in Europe and China. There's some good and bad, a lot of bad, a little bit of good coming out of China. But we'll see what they come out of those G20 meetings with and what kind of impact that has on the market as a whole. And the interest rate is going to be announced tonight on the Aussie. So if you're looking for a trade tonight, 10:30 tonight, then you can go over and look at the Aussie dollar. You can trade the Aussie dollar on Nadex. You could look at spreads or binaries. And they'll be releasing the rate statement, and they've been having a lot of bad reports. And, so it definitely should have a massive impact on their currency. It's a great time to do what you can do a straddle. You can do a binary straddle. You can do a spread straddle. And we make it really easy. We teach you how to do that. But one of the big things is you want to do it with limited risk. Of course, a straddle is going to include limited risk. But you want to go in and you want to look at either one, trading it before or right after the announcement based on the expectation of move. And if you haven't traded expectations of moves, then you definitely want to. That's one of probably the number one things that's missing in most traders' arsenals is how far they expect the market to move. And we actually post these levels each night. They're updated every day in our diagnostic trading area. And you can go in here to the Aussie dollar, and you can see it'll actually tell you what's a half deviation, a one deviation. So you're probably looking for a half deviation, at most a one deviation move. Once the market's moved, then you need to be looking at closing out your trade very fast when it hits one of these levels. And you can use them for trailing stops. You can use them for binary strike selection. One of the biggest things to use them for when you're trading spreads is to go, how much further do I expect the market to move? Therefore, should I get into this trade? Maybe I have a buy signal, but is there an expectation that it should keep going? And one of the things we talk about on here is I've talked about strategy, such as Nadex, limited risk product. I've talked about system, which is having however you decide to trade, whether it be gap fills, reversals, different types of trending systems, different ways to trade. They also go into style. And style is when to turn off your system or turn on your system. And analogy, I was actually talking to a trader today about this, is on the strategy, if we take it to a sports analogy, then strategy is going to be a lot like going in and going, okay, how do you play football? All right? How do you get a first down? How do you get a touchdown? What are they worth? What are the rules? What are the penalties? And so there's just you have to understand the basics. You have to understand the platform, right? You have to understand the product. You have to understand how it works. How do you win? How do you lose on the trade? That's your strategy. You have to get that down before you can trade at all, right? Carpenter can't, do anything if he doesn't know how to use a saw, all right? So once you got that down, the next thing is system. Now that's your playbook, like in sports. So you have, obviously offensive plays, defensive plays, and Nadex is actually both. It's pretty cool since it limits your risk. And you go in there and you can trade it in a lot of different ways, but you want to have plays for like gap fills, trending systems, Fibonacci, retracements, Fibonacci expansions. You can go on and you play reversals. So a lot of different ways that you can trade it, but all these different systems that you use, and you want to have multiple plays, not just one play. Imagine a sports team with only one play, a football team with only one play. They wouldn't get very far, okay? And so, but when do you use the play? That style. That's reading your offense, reading your defense, seeing what's going on. If they have, depending on how they're spread out, are they about to do a big pass or are they about to, rush the ball? And that will determine what kind of defensive play you do. And so that's understanding how to read the market. So the 4 areas of diagnostics, as I talked about earlier, are fundamentals, seasonals, technicals, and statistics. So on fundamentals, that's, when something's about to happen. Like, you have 2 minutes till the game's over, or it's about to be halftime, or, just whatever. But something's about to happen that's going to affect the game, all right? And so that'd be news. Well, you have statistics. So how far can this person kick? How far can they throw? How often do they catch the ball? How often do they throw interceptions? All those things will help you determine how you need to, strategically defend yourself against that team. And that, again, lets you know what play to use and when. And then the next thing you got is technicals. So that's looking at, how are they lining up? What are they doing? What's the volume saying right now? And that's the part of the technical trading. That's the pattern setups. And a lot of different, obviously, the technicals, MACD, simple moving averages, Fibonacci's, looking at your bar patterns. All that stuff comes into the technical section, and it's how to read the technicals on the market. And then the last thing you have, so if you got fundamentals, you got seasonals. After you got fundamentals, statistics, and technicals, you got seasonals. And on seasonals, you can go in and you can look at, what is their pattern? Do they beat this team often? Do they play well in high altitude or low altitude? So all the different things that can go into seasonal trading. And you just want to be able to put all that together so that way you're not just using one. So many traders rely exclusively on just technicals, but they don't know anything about deviations. And so all their technicals are firing off, but they have no idea the market has really exhausted itself because they don't know how to read, a deviation, expected deviation. And they don't know that seasonally this is when mutual funds sell off, or seasonally this is when, a lot of buying happens, things like that. So, or seasonally this is when people get paid, so their money goes into their 401k, and then that money by autopilot goes into mutual funds, which by autopilot goes into stocks. And so at the 1st and 15th of the month, you're going to have that seasonal trend that will help, slow a down-moving market and will give a lot of speed to an up-moving market. That's a seasonal trend. And so a lot of people don't know about seasonals. And again, you want to put all 4 areas together. You want to know fundamentals. I don't care how perfect everything lines up. If the Fed funds rate's about to come out, you may want to use some caution, right? And so you go in, and that's like going in and you go into a doctor and they give you a perfect checkup, perfect bill of health, and they say your heart's in great condition. You walk out, you don't look both ways before you cross the street, and then, bam, you get hit by a bus. Well, that's because you didn't look at the simple fundamentals, the things that are happening around you that are timed. You know when they're going to happen. You can look and see them coming in advance, and you need to be prepared for them and take caution when they're coming out. And so many traders will just focus on one of the 4 areas, but they don't put them all together. Well, why would you put all 4 of these areas together? Well, the main reason you put all 4 together is so that way you can be prepared, you can be set up to put your orders in advance. You don't want to be the consumer, you want to be the supplier helping the market fill those orders, and they fill them based on those 4 areas because those are the 4 types of traders. We'll talk a little bit more about that when we get right back after this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour here with Darrell Martin. And if you have any questions, you can always give me a call. And the number, just in case you don't know, right there on .com for any of our shows. Call in for any of our traders, and you can call in on the number right here at the bottom. It's 877-927-6648. Again, that's 877-927-6648. And one of the things I was talking about earlier was looking at spreads and looking at how far they have to move to break even when you're choosing your trade. So when you're going to trade on Nadex, you want to take advantage of that. So let me show you exactly how that works. And you'll be able to see it right here. We'll go and what I'll do is I'll log in and I'll show you the actual spread scanner. And this is probably the most important thing, because people make poor trades all the time, not even knowing what they're doing. And that's because they don't have an expectation of movement in trading. Like I said, it's probably the number one thing that traders are missing in all of their analysis. Well, if we go over here, you know, we can pull up a variety of markets. I'll pull that up right there. This shows you all of the S&P 500 spreads. And you know, you can sell. There's a lot. So if you're ready to buy or sell, that's a lot of analysis you got to go through if you're on the Nadex platform, and it's not telling you all the stuff unless you open up each individual ticket. So what we did is we got a live data feed that simply does all the math for you, and feeds right in from the Nadex exchange. You can go in here and you can limit your risk, and you can also go in and do a 2-to-1 risk-reward ratio, meaning a reward-risk ratio, meaning you have the ability to make $2 for every $1 at risk for a maximum potential profit. And so by doing that right there, it'll then go in and it narrows it down. Notice we only have 6 possibilities now. And so I can go in and I can look at, all the different trades that are on. And what I may decide to do is that I want to buy. So I can click on that buy button. That'll just show me the buys. And I can see that there's, a couple different trades. And I may decide, I really don't think 33 minutes is long enough. I want to have more time before my spread expires. So I want at least, say an hour. And then it'll get rid of those. Now I've went from having, if there's 13 choices, that's 26 total possible trades for long and short or buy and sell. And now it's narrowed down to 2 simple choices for me. Now look at, I have 168 minutes on both trades. And I go over here and I go break-even distance, 1.3 versus 3.8. So looking at those 2 choices, I now have to make a decision. All right, well, do I think the market's going to move 4 points or, 1 point? Well, if I think so, if I don't think it's going to move 3 points, then that becomes my trade. My risk on the trade is $40 for one contract. And if I wanted to equal, 1 point move in the spread, or 1 tick move in the spread to be a 1 tick move, or 1 point. So move from, say, 1408 to 1409 to have the same value, $50, like on a future, then I do 5 spreads. And when I do that, I would have the potential to make up to $256. Now, do I expect to make $256? No, I don't. Okay? What I do is I expect how far the market will move by looking at something like a deviation level. So like the S&P, the furthest I'd expect it to move is up to 1413, maybe up to 1421. And so if I go, well, let's just say I think it'll move to 1413, then I can go in and go, all right, well, I have a $42 risk on this, buying at 1409.1, and I do some very simple math. What would I make if the market moved from 1409 and then it moved up to 1413? So I got 4 points right there, and I could make $40 on the trade if it moved half a deviation up. And so not only do I expect it to move past my break-even point, which is only 1.1, meaning if the market expired at 1409.1, then I'd be break-even. Okay? So I expect it to move past break-even, and I think there is actually enough room in the market to at least have a 1-to-1 risk-reward ratio on the trade. So I'd make $40 on the trade if it got to at least a half deviation. Now, I may monitor my trade, and if it goes up there, then I'm watching very closely. If it keeps going, then I keep tightening my stop, and then finally I may decide to exit the trade at maybe a full deviation move. But if you don't look at this, if you don't know what the break-even distance is on the trade, then you get stuck in bad trades that you don't want to be in. And so that's why I definitely recommend that you go in and understand exactly how the products work. They're not complicated. Okay, they seem complicated because they're new, but what do people go? What do you mean by break-even distance? How does break-even distance work? Well, if we go in and we pull up the S&P, so if I go over here and I pull up the S&P, then what I can see is, well, what is it quoting at? Well, it's quoting at 1408.25. So, and this says 1409.3. So there's basically a point there, and the break-even, by the way, is calculating in like exchange fees and all that fun stuff, and but what I can see is, if it's 1409.3 and I buy at 1408, then I basically expect it to move up, a little over a point, and I won't lose any money on the trade. Okay? So how far does it need to move to be at the same price as the underlying market? How far does the underlying market need to move to be at the same price as where I bought the spread? Because I'm expecting the spread will be at least at or above 415 at expiration. That means I'll have maximum loss if it's not. But what it does mean is that I've capped my risk and I know how far it has to move, so that way I don't pick the wrong spread because the market has to move too far. I'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome back here to the Diagnostic Trading Hour. And looks like we got a caller. We got Garo. You still on the line there, Garo?
Yes, sir. I'm still here. How are you?
Hey, I am doing great, man. How you doing?
I'm doing very good. Very good. Thank you. Thank you.
Oh, yeah. Thanks for calling in.
Talking about POT, P-O-T, it's been hit on $40 several times in this past 6 months. You think it's a time to get in, or it may slide lower?
Well, let's see here. Well, right now, I mean, it's downtrending, so you don't want to fight the trend. Let me see. Let me back up. I'll check it out a little bit more for you. So we got on our volume analysis. Yeah, let's see. We got some volume bars. We are passing past a lot of the important bar levels. So we got the volume right there on the upside. Finally got some down volume. This is an interesting bar, so we'll pull back right there. At this point, I mean, are you talking about getting in buying, or are you talking about selling? I'm guessing you're talking about buying, right?
Buying, going long, going long.
Yeah, right now, I wouldn't buy the stock. So, yeah, I mean, if I was, I would definitely be using like an option to do it, or I'd be hedging with an option. I like to see. I'd rather get in a little bit late. One of my mentors used to tell me I'd always rather wish I have something I don't, as have something I wish I didn't.
Right.
And so it's one of those things. Until I've seen it at least make a little bit of a movement in the up direction, I'd rather give up a little bit of that profit potential in the trade. I mean, we've had a nice, it's been a nice pullback, and you're definitely right. on the money. I mean, if we go in there and we could, even put some fibs on the retracements, I'm guessing we're right at about 50% right now from the most recent low and high.
Okay.
Yeah, we're actually a little bit lower than that. So we're a little bit lower than the 50% mark. Yeah, we're at 61. We're actually at 61.8. It just broke below the 61.8 fib level. So, I mean, it's continuing to show strength. It didn't do that with a ton of volume yet, but the day is not over. So I would hesitate before I just hop in this stock yet. I'd make it move up. If it was going to be moving up, I'd be looking first for a break above. I'd want to close. I want it to break above 40.81. I'd want it to pull back, okay, with it still having a close above $40.81. And then on the third day, that's when I'd be looking to buy if it broke that previous day's high. But I would not hop in yet.
I see. It has to go over 40 and 81 and up and stay there?
Yeah, basically it has to go up there, and then that's before I'd even look at a buy on it right now. I mean, because like I said, you've already broke below that fib level. It didn't, and I mean, I broke before, and that's where it bounced. So I mean, you are at that perfect, in a sense, technical level to buy on a potential trade. But I don't know, just with the market, with the elections going on right now, with this thing breaking below this fib level, and with it already, hitting that, and it didn't just hit it. It hit it. I mean, if you look at everything, I mean, you're looking at a downtrend across the board. And so, I mean, I think it could easily make a retracement on down to 38.71 without even trying too hard right there. I could see it closing right over here in the next, I'd say probably, couple weeks. So I think,
slide.
Yeah. I mean, so far it's showing that it's sliding. I would definitely, I wouldn't be buying the stock yet.
Very good. I appreciate it. Thank you, sir. Thanks so much.
You bet. Hey, no problem.
Right. Sure. Bye-bye.
All right, Darrell, thanks. Appreciate you calling in. And again, if you got any questions, give us a call. And to get back and sort of focus a little bit, I know we went through a lot of things pretty fast this morning to focus a little bit on this whole break-even distance thing. All right, so when you're trading a spread on Nadex, then there's going to be a break-even distance. Why? Well, because in essence, it's a type of option. It's not a call, it's not a put, it's not a vertical, there's similarities, but you don't have to worry about all the Greeks and all that crazy stuff. But there's a little bit of time premium in there. And so that little bit of time premium, and by the way, you can be the buyer or the seller of the premium. All right, you can be on either side of that. So it's not like somebody's hosing you, the other trader on the other side, the market maker on the other side is the one filling the order. But you can be on either side of this order. So you can be the guy collecting or paying the premium. And break-even distance is how far at settlement does the S&P 500 have to move, again, to be at break even at expiration. So again, if we pull up the S&P and we focus at 1408.9 right now, then what you can see, it has to move really less than a point. So 0.8, so 1409.8, you can see it right there. So that's why it only has to move up, basically a point right there to be at break even, meaning I need the stock to be, or not the stock, I need the future to be at 1409.8 at expiration to not have any loss in the trade, not including exchange fees, which are very limited, which is great. I mean, they even cap them where if you do more than 10 contracts, there's no additional fees on that order. But break-even distance is the difference between where you buy the spread and where the market is when you're buying. So if it's 1409.8 minus 1408.75, that difference, that's where we're getting that break-even distance calculation. And sometimes you'll see really big break-even distances. Okay, right here, this one has 2.8, so it has to move 2.8 points up because you're buying at 1411.8. So at expiration has to be at least at 1411.8 for you to be at break-even. And you need to know what that break-even distance is, so that way when you go over here and you're choosing your trades and you're like, hey, I want to buy, again, how far do you expect it to move? If you only expect it to move a few points, well, then this would not be a good trade for you. But this one might be a good trade depending upon your risk. So it's all how far do you expect it to move, whether you're looking at fibs or highs and lows, or you're looking at gap fills, or whatever trade that you're potentially looking at. How far do you expect the market to move? And that'll let you know whether or not that's the right spread. And I've seen so many people go in and choose the wrong spread because you know what they focus on? The first thing they focus on is risk. And is that wise? Yeah, risk is definitely, you should never make a trade until you've went in and analyzed your risk. But you have really, I guess you could say, three types of risk. Okay, you have risk to expiration. You have risk of movement, needs to move to break even, And then you have your maximum capped risk here in dollars. So I need to have enough time for it to move, and I need to expect it to move far enough. And if both of those line up, then am I okay with the risk in the dollar amount? So am I okay with risking $50 on this trade? If I do 5 contracts, am I okay with risking $250 on this trade? And start with time, then move to break even, and then roll on over to dollars. Don't start with dollars. That's where most people start. That's the biggest mistake they make. And they'll go in, and I'll show you an example right here of what they do. You go in, and I'll reset all the filters. And what you'll be able to see is that they pick, oh, I have it highlighted, that's why it's on there. They're going to check it. And they go, and they literally just look for low risk. They're like, oh, $7.80. Well, it only has 18 minutes. So you don't really have a lot of time. So yeah, you're only risking $7, but you're not giving yourself any time to have, a highly profitable trade. And, and again, you may be key with that. Maybe there's an announcement coming out, okay, in the next, couple minutes. And so maybe you're okay with 18 minutes, but you need to have a reason to be okay with 18 minutes, such as I think, some sort of federal government announcement is going to come out. So I think it's going to move really fast, really far, really quick. Therefore, 17 minutes is fine with me. That would be different. But if you don't expect, if you're not just trying to make a 17-minute trade, which the only time you're probably ever trying to do that is based on a news announcement, then you don't want this short-term trade. I don't care if the risk is only $7, okay? So you have to look to your time at risk. So how long do I have for that market to move? I may hop over on oil, and oil could actually have, a really big movement requirement. Let's see, here we got, down here, this one has to move, 21 ticks. It's only risking $17.80, which looks really attractive on an oil trade. But again, it has to move 21 ticks. Well, why? Well, because in this case, it's out of the money. It's actually trading lower than where oil is, and the ceiling is actually even lower than where oil is. So you can't even start making money until oil gets down to 84.83. So just because it's low risk doesn't make it the best trade. Remember, Nadex is about capping your risk. It's not just about low risk. And so since your risk is capped, that takes care of the whole risk management side. Once you're in the trade, you're not worried about getting stopped out. You're not worried about your risk increasing. You're not worried about margin calls. So there's a lot of things you're not worried about when you trade on Nadex. But when you choose your spread, you do need to make sure you look at, do I have timed expiration? How far does it have to move? If those two things line up, then am I okay with the risk? And then you can compare them. And after you've lined all of that up, and we'll go over, let's see if we can find a lot of times currencies are a really good example. So, all right, we got euro dollar, and let's check this out, see if we can find some that have like the same floor and ceiling. They've been moving sort of up and down quite a bit, so I don't know if we're going to find anything that'll work out just perfectly, but we may be able to find some that are pretty close. Let's see, that's going to have too high of a risk. Let's narrow down the risk. Again, it makes it really simple. I want 2-to-1, or I want a 1-to-1 risk-reward ratio. There we go. So we got a 2-to-1. So I want to be able to make $2 potential for every dollar at risk. And we go down here and look at these two trades. Now let's just say you're okay with these. These have to move. They have 75 minutes. Okay. So basically, because they are going to settle at 3 o'clock Eastern time. They both have to move 13 pips. Okay. So you're like, all right. Let's just say you're okay with that. And then you go, there's only $5 risk. So let's say you're okay with that. Now how do you choose between the two? So if we checked off the time, break-even distance is okay, risk is okay, now we have reward. This one can only make $91 maximum. All right? This one can make $241 maximum. Again, they both have the same time to expiration. They both have the same break-even distance. They both have the same risk. There is no reason to do this trade. There literally is no benefit at all in doing this trade. This trade, there's a lot of reason to do it, right? $241 prop potential, so you have a lot better reward-risk ratio. And to make that easy to see, one of the things we added in was reward-risk ratio over here, which is like $15 prop potential for every dollar at risk, or $41 prop potential for every dollar at risk. And so that simple trade right there lets you know this is the spread I want to do. And if you don't know how to go through and pick all these out, then you could pick the wrong spread, and you could have cost yourself, about $150 prop potential. Now that would require that the euro dollar does move quite a bit, and I doubt it's going to move that far. But what if it does? I mean, there are days like, Friday when gold and silver moved a tremendous amount, further than, really anybody would expect it to move. And you could have given up a ton of profit potential just by choosing the wrong spread. And that's one of the big reasons I made the scanner and got programmers to help me get it all put together and everything, is because I hopped on there, but there was all these different choices. And I'm like, okay, well, I need to do all the math. And I made this whole Excel sheet where I was typing in the prices, and I had all the formulas already plugged in. All I had to do was put in the prices, but of course they're constantly changing. Every second the market's moving, right? So, I needed a way to analyze this fast, because it's hard enough. I think you'd agree. It's hard enough to do all your analysis, to go in and look at your technicals, your fundamentals, your seasonals, your statistics, and then finally pick your trade. Well, once you pick your trade, you don't have 30 minutes to pick which trade to get into, because the move may be over by the time you've went through and analyzed, all the, let's say there's 13 different choices, all the different 13 spreads that you could choose from. And there are ways to narrow that down. You could not look at the ones that are coming close to expiration. That could knock a few off. And you could focus on the ones that are close to the floor and ceiling, and that could, knock a few off. But then you still have to go through, and let's just say you have 3 or 4, okay, that you've narrowed it down to quickly. Now you still have to go through and look at the math and go, what's break-even distance? And what's my risk? What's my reward potential on this trade? And, again, the trade could be over. You could have given up, maybe, even if you gave up $10 or $20 or $30 on just one contract. The trade is, let's just say the market moved, 10 pips on the euro dollar. You give up $10 per contract just because the extra time it took you to find it. And Nadex, in my opinion, in every way, is the best way to trade. But you need a way to make it easy. And so that's sort of like, why I went in here and did it. And you need to understand, what are the important things to look at. And this right here, the scanner is not so much about telling you which trade to take as it is telling you which spread is the best one for your trade. So it's not telling you to buy, it's not telling you to sell. What it's telling you is, if you're going to buy, then this is your ideal trade. If you're going to sell, this is your ideal trade, because it does all that analysis. On the buy side, we have the exact same thing. We have 72 minutes to expiration. They're trading right at par. Okay, so the market didn't really even have to move, and I can get in these trades, which is great. But this one can only make $86. This one can make $236. So why would I want to take a trade that could only make me $86 when I have a trade that could make me a potential $236? And now you don't have to do the math. You just look at these columns right here. Start off with time. Okay, check. Break-even distance. Check. Risk. Check. Okay. Reward. Wow. All right. Well, that made it easy for me. And you can accomplish in a matter of seconds what would literally take, at best, 5 minutes. And if you're new, it can take you an hour. So then the markets are moving. So by the time you've done, your analysis for the last 3, and you're on your 4th one, then the market's moved, and now your calculations are off. So, my goal again was just to make it as easy as possible to trade on what I think is the best way possible to trade. And so you can go in there, and that just makes life really easy. So a little bit repetitive, but I want to get that point across, because I see so many people go in and they just focus directly on risk, and they really give up picking, I think, some of the best trades. I think they go in and they have a few bad trades, but they were picking the wrong trades, and they wonder why they lose. And it's just because you need to look at what's your probability of success based on direction, time, and also risk. All right, well, stay right there. We'll go back, and I'm going to talk to you a little bit about the economic announcements coming out tomorrow. Of course, we know what the big one is. I doubt we're going to hear the results tomorrow, but we'll talk about a couple of the economic announcements you need to be aware of tonight and tomorrow right when we get back. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Like I said, tonight we do have the Aussie dollar rate statement coming out. So their interest rate, Fed funds rate, you could call it. They call it the RBA. But their rate statement is coming out, and you can check that out over on their website. It'll be on RBA.gov. Okay, again, that's RBA.gov. And so, wanting to trade that, you can, like I said, you can trade it on Nadex with limited risk. You could buy, you could sell, or you could do both. You could straddle it. Buy one above, sell one below. And then let's see, what else do we have going on? Again, that's going to be at, it looks like 10:30 Eastern Time tonight. So even for all you part-time traders out there, that's a good setup for you. And then we got the Spanish Services PMI should have an effect on the euro dollar. That's going to come out at 3:15. And all the PMI numbers can be found on marketeconomics.com, M-A-R-K-I-T economics.com. I'll show that to you over here. And so you can check that out when that comes out. Again, that comes out at 3:15 Eastern Time tomorrow morning. And let's see what else we got going on that should have a pretty good, decent impact. Okay, we got manufacturing production coming out of Britain. So we got a pound-dollar trade at 4:30 a.m. And again, great way to trade the news with Nadex there. And so you can get the updated report that'll be posted right there on the UK website, ons.gov.uk. And just look under release calendar, and you'll be able to find it right there. Okay, so ons.gov.uk. And what other fundamentals we got? We got the IVPMI. So IVPMI, that is a Canadian dollar impact report. And so that's ivpmi.uwo.ca, or just go to market. That I said right there. So the market one's market economics is probably the easiest place to find it. But that number will be coming out for the Canadian, and that is released at 10 a.m. tomorrow. And of course, we're going to have the elections all day long. And then there's also going to be a New Zealand financial stability report. Can't trade the New Zealand dollar yet over on Nadex, but if you do trade the New Zealand dollar, then that would be one of the reports you could check out. And from their Reserve Bank and their financial stability, that'll be coming out rbnz.govt.nz. So RBNZ, so Reserve Bank of New Zealand, okay, .government.govt.New Zealand, NZ. And so that's where you can check that report out. That'll come out tomorrow afternoon at 3 o'clock. And expect all things, I'm sure, will be pretty quiet. I doubt we're going to get results. If we do, it'll be absolutely a miracle, I guess. I don't remember the last time we got them on time. But I saw like one senator is doing some big like shooting gallery thing where you can literally, like, they're out of gun range. They're out shooting while they're waiting on the elections results to come out. But so as all those come out, make sure you do go out, make sure you vote, and take the time to do that. And if you haven't done so already, if you have, great job. And if you have, just make sure you do get that knocked out tomorrow. Let your voice be heard. And you can't complain if you don't vote, all right? Anyway, so even if you don't like all the candidates, I mean, just narrow it down to the best of the worst if it comes down to that for you. But at least make your voice be heard. And, just, proud to be an American. Glad that people have, really fought to make sure that we do have that right, and want to take advantage of that. And one of the ways that we thank them for that is by going out and voting. All right, do a quick summary on the market, and we'll wrap it up for the day. We got the S&P up just a couple points. We got the NASDAQ up 12. We got the Russell up 6, and the Dow up 24. Copper is basically flat on the day. Silver has moved down quite a bit. It's down over 1% on the day right now. We got so it's making a pretty big move. And we got soybeans down 1% as well. And so it hadn't moved a whole lot, but in the last hour, silver's definitely picked up. And I got corn down 5. Looking over at our energies, we got oil is up 26. Natural gas is flat. And euro dollar and pound dollar still pretty flat. Down about 50 pips on euro dollar, and down about 49 pips on pound dollar. I hope everybody has a great day, a safe day, and we will see you tomorrow, same time, same channel. And stay tuned right here because we have another great show coming up for you.